Hi, in this video I want to introduce a new position that I just took on Tradier. The idea was to look for a diagonal on the SPX that has relatively high implied volatility skew, in relation to CPI, for tomorrow. I found one that is roughly at the money, around 41.28, and currently at 41.45, 41.50. However, that alone doesn't look very promising because if the market is bought tomorrow, it can quickly turn into a loss. So, I decided to buy 42.60-65 call spreads in a vertical position to cover the part if we go too far as a hedge. I chose this range because it's around our previous peak, so even if CPI is much better than the market expects, I don't think the market can go further in an upward trend. I would rather speculate that the volatility skew will collapse and we will stay somewhere around here, and it will start to widen. But just to be safe, I also bought a vertical spread going up, which is essentially a vertical spread. Here are the screenshots. The vertical cost 0.60 and the diagonal cost 130. So tomorrow we'll find out how this position plays out. Obviously, if things go much worse than expected, it could be a total loss. So, I'll continue from here.